For the past few decades, we really thought we had the global economy figured out. It felt like there was this simple, powerful set of rules that just connected everyone and made things work. But those rules, they're being completely torn up and rewritten right now, right in front of us. So let's dive into this massive rewiring of the global economy.
The old playbook, it was all about one thing, really: maximum efficiency. The whole goal was to make things cheaper, produce them faster, and ship them further than ever before. We built this incredible system of just-in-time delivery, relying on single factories in faraway places to get the absolute lowest cost on everything from microchips to t-shirts. And you know what? For a long time, it actually worked.
But this hyper-efficient machine, it had a critical flaw. It was incredibly fragile. All it would take is one major shock to shatter the entire system. And as it turns out, we didn't just get one shock, we got two. To really get what's happening now, we have to look back at the seismic events that basically fractured that old system and forced everyone to completely rethink the global economic map. It all started to bubble up around 2018 as trade tensions between the world's two biggest economies really started to heat up. But then came the knockout blow, the COVID-19 pandemic. Suddenly, lockdowns paralyzed factories, ships were just stuck out at sea, and the flow of everything we depend on just ground to a halt. It was this 1-2 punch that really exposed just how vulnerable that cheaper, faster, further model truly was. And listen, this wasn't just some minor inconvenience. An Ernst & Young survey found that the pandemic disrupted the global supply chains, or GSCs, of nearly half of all businesses. Just think about that for a second. The GSCs, they're the invisible networks that get a product from a factory all the way to your front door. And for almost half the companies out there, those networks were suddenly broken. The system wasn't just bent, it was shattered. So, the first and most immediate result of this whole breakdown was a complete revolution on the factory floor and in the shipping lanes. Companies realized they simply could not afford to be this vulnerable ever again. Okay, what's so fascinating about this is the fundamental shift in mindset it shows. The old goal of pure efficiency has been totally replaced by a new obsession: resilience. Just in time has become just in case. Instead of depending on one single supplier to get the lowest price, companies are now diversifying, using strategies like China Plus One, so they always have a backup. It's not just about the bottom line anymore, it's about survival. And this gives you a perfect visual of that change. On the left, that's the old model, a simple, straight line from point A to point B. Super efficient, sure, but if any single point on that line breaks, the whole thing just collapses. Now look at the right. That's the new model, a complex, redundant web. Yeah, it might look a little messy, but it is strong. If one path gets blocked, there are a dozen others to take its place.
So how are they actually doing it? Well, first, companies are doing these deep dive risk assessments to find their weakest links. Second, they're building up buffer stocks, basically keeping extra inventory on hand just in case. And third, they're aggressively diversifying where they get their stuff from, moving production closer to home with nearshoring or spreading it out across multiple countries.
But this whole rewiring, it isn't just happening with physical things. At the very same time the world's supply chains were cracking, a whole new economy was absolutely exploding online. I mean, this number is just staggering. In the Euro area, almost half of all services exports, we're talking about things like consulting, design, financial services, can now be delivered completely remotely. That is a huge jump from where it was just a decade ago. It shows you that trade is becoming less about shipping containers and more about digital connections. But this digital revolution is a real double-edged sword. On the one hand, it's an amazing solution, right? It creates global talent pools and opens up worldwide markets. On the other hand, it creates a whole new set of challenges. It widens the digital divide, leaving people without good internet access even further behind, and it opens up this Pandora's box of cybersecurity risks and data privacy concerns. All right, the third and final piece of this great rewiring is all about geopolitics. As the old rules break down, countries are looking for stability, and they're finding it by forming stronger partnerships with trusted allies, creating what you could call a world of economic blocs. So this slide might actually surprise you. If you asked most people who America's biggest trading partner is, they'd probably say China, but they'd be wrong. In 2024, U.S. trade in goods with the EU was over 60% higher than its trade with China. The transatlantic economic relationship is by far the biggest in the world. And this relationship, it goes way deeper than just trade. This chart shows where foreign companies that operate inside the U.S. actually get their earnings from. A massive 59% of those earnings come from European companies. So this isn't just about exchanging goods, it's about deep, long-term investment, shared innovation, and millions of jobs on both sides of the Atlantic. So when you put all these pieces together, the resilient supply chains, the booming digital economy, and these stronger regional partnerships, it becomes really clear what's happening. We are not deglobalizing. The world isn't shutting down. No, we are reglobalizing into a more complex, more regional, and multipolar world.
But this rewiring isn't just changing the pathways of the global economy, it's starting to change the very definition of value. And just as we're all getting our heads around these huge shifts, a totally new variable is being added to the equation: greenness. This is basically a measure of a company's environmental impact and its sustainability, and believe it or not, it's starting to have a real effect on financial stability.
And what researchers are finding is just fascinating. In Europe, it turns out the companies with a better greenness score are proving to be more resilient to economic shocks. Now, that same link isn't as clear yet in Asia, which suggests we're seeing a regional split. This is a brand new wrinkle in the rewiring, where sustainability isn't just some ethical choice, but a core component of economic stability and value.
And this all brings us to the ultimate question. This great rewiring is happening, whether we like it or not. We're creating a world that is hopefully more resilient and more stable. But as we form these new networks and these new blocks, we have to ask ourselves, are we ultimately building stronger, more meaningful connections, or are we just building higher walls?